Bro, that's 3,000 points on gold. 3,000 points, bro. Look at this. Breakout up to here. That's 3,058 points all the way up to the top if you held it for a swing. 5,500 points. 5,500 points, bro. I'm talking serious, like, what? Man, let's go, bro.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
What's going on, guys? Joe here, and it's time to trade and get paid. Man, we just finished up a fire week in the markets. All kinds of crazy stuff going on. But last week we had the Jeremy Powell announcements, NFP, markets were crazy. This week we had our year-over-year inflation announcements, building permits, Michigan sentiment, all kinds of fundamentals involved. And with the bank closures going on, we already know gold is going to go up. Like that we already know that based on just the bank closures and all that stuff. Anytime there's kind of chaos in the world, and anytime the US Treasury is going down, gold is going to go up, right? So we already know that. So now we ended up catching a beautiful trade last night. I took the notes off the screen because that's for TGP members only, but I did want to kind of show you what we did. And you know, if you do want to get the full notes, then you can just join TGP and get all the notes for every trade setup that I send. We're over 94% win percentage for the year. Over 94%. We're killing it. We're killing it. So anyway, before we go forward, do that. Join TGP. Links in the description. And that's that. Let's see. All right, so check this out, guys. Jump up to this 1 hour chart. I just want to show you real quick. You obviously see what's going on, right? We had this little rounded bottom, and then it's been pushing, right? So we had a push up, we had a pullback. That's simple. We caught that one too. I called that one to the team as well. Boom, easy money right there. Nice little trade, but that's not the big one. The nice one is this. We caught this one, and bro, I'm talking fire. So let me tell you what we did. So first things first, on this 1 hour chart, we saw the rejection, and then the way something moves tells you the way something's going to move. All right, write that down. Take that into your mind. Put that into your study. The way something moves will tell you the way it is going to move. All right, so we know that we're bullish, and a lot of it has to do with fundamental analysis. But the way we look at fundamentals is that it either prolongs or speeds up what the technicals do, because technical analysis is king, is tops. It's the first and foremost. And fundamentals influence how we look at the technicals. They don't necessarily overrule or override the technicals. So when we see upward movement and then fundamentals are involved, we come back to the technicals to see how price is responding to the fundamentals. All right. So with bank closures and the Powell announcements and the dollar and the inflation and all the craziness that's going on, especially with the banks, money's going to go into gold. So, but when we saw that first move, all right, so it's like, kind of moved up nicely, had a nice little pullback, and then gave you a nice push up. But that push up tells you a lot, because when we look at that, once we have that marked out, you see how I put that on there, from here to here, from here to here. Now, just to show you, let me go into replay real quick. This is where I called the trade to the team. All right, this is where I called it to the team. And we were looking, you know, it was you know, early on in the night. And I told him, I said, London, US session, it's going to kill. So we got the high, we got the low, we got the low, we got the high, right? So, or the higher low, and, you know, lower high, higher low. You understand what I'm saying? So we got this nice little triangle playing out. All right, we got this nice little triangle playing out. But where did it come from? That's what's important. So when we look at that, man, look at this. This came from here, and you see that's like straight bullish. And then it just stops up here before coming and pulling back down. That right there gives you what kind of appears like a flagpole, even though this is more of a triangle pattern. This gives you that nice push up, and then the consolidation. Consolidation breeds continuation. And so when we saw that consolidation happening, what it's telling us is that they're gathering more liquidity for another strong push up. So when you see consolidation after a strong push up like this, a real just definitive move, not like this where it's moving like this. I'm not talking about that kind of bullish move. I'm talking like this one where it just like goes in one direction and there is no doubt about who's in charge, right? When you see that and then it's followed up by a consolidation like this, you already know that there is likely to be not just a continuation, a strong continuation. So once we have this right here, we're gonna come and we're not gonna trade the 1 hour. We're gonna come down to the 30-minute, and then we're gonna open that up. Look at that. So now when you see that, now look at how beautiful that looks on that structure. Look at how nice that looks. Man, we don't need anything else from here. We already know this is it. That's a wrap. I gave you everything you needed already. This video, you know, it's over. You know, like what you saw was the strong push up. The fundamentals dictated that. The technicals made it happen. We saw the strong push up followed by the consolidation. And now we simply wait for the breakout. We simply wait for the breakout. So now when we see that happen, right, watch how it plays out. We see that price starts moving. We see it continue to push up. And then I want to show you something very important, very important. You say, wait a minute, there's a breakout. There's a breakout. Yes, that is technically a breakout. However, number one, 2 rules. One, the first breakout is generally the fake out. So don't jump in just immediately just because you see a candle close above, right? What you want to see is volume. I don't want to see where we have like indecision, you know, as we're breaking out. I want to see volume. I want to see a real strong move, okay? So as we start to see what happens, watch. Man, price don't know really what it wants to do. Price is kind of like playing around. You see that? How it's like sitting on the line. Now what you want to do is and now I don't care about the yellow candles coming back down, because at this point, not that we're trading with bias, we're trading with educated understanding. We're trading with the fundamental analysis and then the technicals to take us up. So we already know we're looking bullish. We're not really looking bearish. Okay. So now the next thing we do is we look and we wait for that volume breakout. And there it is, right? We see a candle that is bigger than the previous candles. It's right after some wicks. Now, why is this not a volume candle? Well, because it comes and there's no real indecision there. There's no liquidity gathered. There's nothing happening there to dictate that volume has started. I don't want to get in after volume is already expanded. I want to get in at the beginning of volume. See this? Push up, push up, push up. There's volume there. And then this, yes, it's a nice size candle and it's bigger than the previous 2, but it's at the end of a volume extension, and that just doesn't seem like a great area to get in. That's asking for a fake out to happen. So now I'm waiting for this, and then once I start seeing all those wicks and I see these yellow candles and stuff, then I see a bullish volume candle. Now I know I'm not in at the end of a volume move. I'm in at the beginning of a volume move. Bro, let's stop right there for a moment. Let's stop right there for a moment. Honestly, I'm not trying to give you a commercial, but this is why you need TGP. Because this kind of content, this kind of understanding about where volume happens, when volume happens, honestly, not everybody's teaching you this kind of stuff. They're just showing you when this moving average does this, or when it rejects a 50, or when a pivot does this, or when an RSI is overbought or oversold. Like, I'm not even looking at an indicator. What I'm showing you is how to understand and read volume on the charts. And so timing and price are the two important components. So when we come in here and we see that we have indecision after volume move, we have confirmation that we're bullish, we have consolidation, we have our volume pushed to the upside, our fake out, we have indecision with all these wicks, and then the volume breaks me out past all of my indecision. Bullish volume candle, I'm in the market. Fire, all in, right? So now check this out. Watch what happens. Let me just go ahead and let it play. We get our entry, and that's okay. We get that's our breakout, and then there's our retest. Look at that, guys. Breakout entry, retest entry. Now I'm just showing you either way. I'm not telling you which one to be, a breakout or a retest. What I'm telling you is, if you're a breakout trader, that's where the volume began. If you're a retest trader, here was the retest, and this is where you would have got in. So what is the benefit? Let's talk about that for a minute. What is the benefit of being a breakout trader when you know there's going to be a retest and drawdown? Well, the benefit is that if you get in here, yeah, you're going to eat a little bit of drawdown. But what happens if you wait? The entry is all the way up here, so you're missing out on a big move right there. So the benefit of the breakout entry is that you're likely not going to miss out on that extra, amount of points. So in this particular case, let's look at that. From the breakout right here, from the breakout to the retest, that's 345 points. That's 345 points that you're missing out on because you waited for the retest instead of doing the breakout. Now, what's the con? The pro is that you get more points. The con is that if you're not a patient trader, or if you're a scalper, or if you don't understand how to wait for those moments, when you got in right here, when you got in at the breakout, there's a likelihood that when this started going backwards on you, you were ready to quit. You were ready to get out of the trade. You were like, oh man, this is going the wrong way on me. But then the volume came in, and that's how a lot of traders lose, is they don't understand the difference between that breakout and that retest. So the pro of the breakout is that you get an earlier entry and a more pips. The con is that you have a little bit of drawdown to eat right here, and that really is just up to you, and I'll leave that up to you. So if you were the breakout trader, you got in here. If you were the retest trader, you got in over here. So now let's come and let's see what happens. I call out to the team now, and look how nice this is. Look how nice this is, right? Now that's the other thing. This was the 5 a.m. candle. So London gave us a lot of nonsense. The 5 a.m. candle gave us the breakout, and then look at that, 7 a.m. We already know 7 a.m. is when, even though the U.S. session is open an hour later, that 7 a.m. candle generally gives us some nice it's that crossover movement, right? So we get that volume at 7 a.m. And if you're trading U.S. session, you are a happy camper, because look what happens next. I mean, there is no doubt. There is just no doubt. Look at that. Now, what happened? We got a nice push. We got the indecision. We got the volume, breakout, retest, entry. So let's just assume that you were going to take the retest entry because you're a more patient trader. You would come back here and you would set it behind your entry candle. You would set your target, and then all you got to really do is look left. Now, in the case of this, because it's higher than it has been in a little while, you'd have to go and switch it to a different chart. you'd have to go up to that 4 hour. And what you want to do is you just want to look left, and then you, boom, there's your target. That's your next structure, and there's your target. So now we come back down to the 30-minute, and look at that. We're 1 to 3. We're better than 1 to 3 on our risk reward. Now, does that mean that the trade is over right there? Not necessarily. What it means is that we want to scale our trade as the profit continues to move. As price starts to move up, we want to, number one, secure the bag along the way. We want to secure the bag by closing half of our position at each interval. The next thing we do is, as price moves, we have to understand that so does risk reward. As price moves up, look at how big my stop loss is in comparison to my target. So as that moves up and we start, like, you know, we get a push right there. We get a nice push right there. As soon as that candle closes, I'm already looking to put my stop loss behind the next previous candle. It moves up again, boom, closes. I'm looking to get behind that candle now. And I'm trying to secure the bag as much as I can along the way. So, guys, look how fire that trade ends up. And now by this time, it's 10:30. You've been in this trade for a few hours. You know, if you're trading the US session, this is perfect for you. And you probably want to start wrapping up the US trading around 11:30, 12 o'clock. I generally, if I'm trading US, I don't carry trades past noon, because that's when the market starts to get a little wonky, and you start to see, you know, just some weird stuff start to happen as US close is in sight, you know. But look at this, guys. Look at this. You get that little pullback, man, bro. Look at that. Look at that. This is just crazy. So when you see it, it's just amazing. Now, if you held it all the way, to where you know, where the price stopped, or as the market closed, you know, look at this. If you held it to the end of the session itself, I mean, my goodness, you're talking 5,500 points. That's the equivalent of like 550 pips if you were trading Forex, right? But because it's gold, it's points, not pips. So, I mean, I want you to just look at that. Look at that. From a retest perspective, look at how that ended up. Now, we don't know exactly where it's going to end, so we secured a bag along the way. But I mean, my goodness, you're talking about 8 times the profit than you had in risk. It doesn't get better than that. Like, that's so fire. So, and this is gold. This is gold. So when you see this stuff happening, because gold always comes back to supply and demand, fundamental analysis, and where is price moving. And so when we see a move like this with a strong move up, a consolidation, look for the continuation, especially when we're talking gold. Look for the continuation. Don't get faked out on the first little move. Wait for the volume candle. If you're a retest trader, wait for the retest. And then once that happens, if you're a breakout, get the breakout. If you're a retest, get the retest. And once that happens, just look left for your target and use your previous structure or your engulfing candle to be your stop loss. And guys, that's how you trade gold like fire. All right. So go back, test it. I want you to go and see each time you see trends happening in gold. This is just a trend trading strategy. It's just a, you know, trading. This is easy trading with the trend on gold, and it's one of the easiest, strongest, most sure, high percentage strategies that are out there when coming to trade gold. So I hope this helps you. I hope this, you know, brings a lot of value to you as you attempt to trade gold, as you start to approach the gold market. And with banks closing and a lot of craziness going on around us, man, gold might be a really solid option for a lot of people, you know, as we start to move forward. And not that Forex is strong and it's not going anywhere, but gold is definitely looking to be a great option. You're seeing the crypto market go up a little bit now. These bank closures and things like that are going to send alternative markets into highs. You're going to start to see future contracts. You're going to start to see, of course, gold, oil, crypto. You're going to see a lot of those things start to go up. And if you're part of TGP, you're going to get my guidance as we go through and eat all of that stuff. Crypto, gold, Forex. We're going to kill the game in everything. So jump on board. And that's that. So guys, I hope this helped. Let's eat. Let's eat. Let's eat. Let's make some money, guys.